Investing for beginners. An introduction to investing. Understanding key investments. Risk. Return considerations. Investing is a powerful tool for building wealth over time, but for beginners, it can seem like a complex and daunting world to navigate. This article aims to provide a comprehensive introduction to investing, focusing on key investment options like stocks, bonds, and mutual funds. The basics of investing. What is investing? Investing is the process of allocating your money with the expectation of earning a profit in the future. It's a means of growing your wealth beyond what you can achieve with a regular savings account. When you invest, you are essentially buying assets with the hope that their value will increase over time. Why invest? Investing offers several advantages over keeping your money in a savings account or under your mattress. The primary benefits include 1. Wealth growth. Investments have the potential to grow significantly over time, helping you achieve financial goals such as retirement, buying a home, or funding your children's education. 2. Income generation. Some investments, like dividend-paying stocks and bonds, provide regular income through interest or dividends. 3. Diversification. Investing in a variety of assets can spread risk and reduce the impact of poor-performing investments. 4. Beat inflation. Investing can help your money keep pace with or outperform inflation, ensuring that your purchasing power doesn't erode over time. Key investment options. Now, let's delve into the 3 primary investment options. Stocks, bonds, mutual funds. 1. Stocks. What are stocks? Stocks, also known as equities, represent ownership in a company. When you buy a stock, you become a shareholder and own a portion of that company. Why invest in stocks? Potential for high returns. Historically, stocks have generated higher returns compared to other asset classes over the long term. Dividend income. Some stocks pay dividends, providing a regular income stream. Risk. Stocks are subject to market volatility, and their value can fluctuate significantly in the short term. Bonds. What are bonds? Bonds are debt securities issued by governments, corporations, or municipalities. When you buy a bond, you are essentially lending money to the issuer in exchange for periodic interest payments and the return of your principal at maturity. Why invest in bonds? Steady income. Bonds provide predictable interest income. Lower risk. Bonds are generally less volatile than stocks and are considered a safer investment. Risk. While bonds are less risky than stocks, they still carry some risk, such as interest rate fluctuations. Mutual funds. What are mutual funds? Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers. Why invest in mutual funds? Diversification. Mutual funds offer diversification, reducing individual investment risk. Professional management. Fund managers make investment decisions on your behalf. Risk. The risk associated with mutual funds depends on their underlying investments, so it varies. Risk and return considerations. Risk is an inherent part of investing, and understanding it is crucial to making informed investment decisions. Here are some key points about risk. Risk tolerance. Your ability and willingness to tolerate risk will influence your investment choices. Young investors often have a higher risk tolerance, while those near retirement may prefer lower risk investments. Diversification. Spreading your investments across different asset classes and individual securities can help mitigate risk. Return. Return refers to the gain or loss on an investment over time. When considering potential returns, keep the following in mind. Historical performance. Past performance is not indicative of future results, but it can provide insights into an investment's track record. Time horizon. Your investment time horizon can impact your potential returns. Generally, longer-term investments have the potential for higher returns. Conclusion. Investing is a powerful tool for achieving your financial goals, but it requires knowledge and careful consideration. By understanding the basics of investing, key investment options like stocks, bonds, and mutual funds, and the importance of managing risk and considering potential returns, you can embark on your investment journey with confidence. Remember that investing involves risks, and it's crucial to conduct thorough research or consult a financial advisor before making investment decisions. Stay tuned for more financial tips and have a great day.